Welcome back to Explain the Charts. Today, September 20th, 2025, we're diving deep into ETHUSD, examining a confluence of recent news and detailed chart data. The crypto space is abuzz with bullish sentiment surrounding Ethereum, following reports that a significant pullback may be complete, paving the way for a potential 77% rally. Just 2 days ago, analysts highlighted ETH retesting crucial support around $4,811, with breakout targets soaring towards an ambitious $8,557. Major institutional players like Bitmine and SharpLink have reportedly scooped up massive amounts of ETH, bolstering confidence, especially after positive US PPI data showed inflation cooling. Adding to the optimism, the Federal Reserve recently trimmed interest rates, and Ethereum's co-founder, Vitalik Buterin, addressed concerns regarding staking withdrawals, providing clarity and stabilizing the market. Looking ahead, Ethereum's Fusaka hard fork, scheduled for December 3, 2025, promises enhanced scalability, security, and reduced costs, which could act as a significant catalyst. For today's analysis, we'll start with the daily chart to get a macro perspective of how these news events are reflected in price action. On the one-day chart, a broader view reveals Ethereum's impressive recovery from July 2024 lows below $3,000. We can clearly see an ascending trendline forming from the March 2025 lows, demonstrating consistent bullish momentum. Notice the peak in late August 2025, where ETHUSD hit a high of $4,958.70, which now stands as a critical long-term resistance level. The sharp pullback after this August high, particularly on August 25th, aligns perfectly with the news of Ethereum's pullback ending. The subsequent rally seen around September 11th and 12th, where price jumped significantly, directly correlates with the news of massive institutional ETH purchases. These large buy-ins provided a strong upside momentum, confirming institutional confidence in Ethereum's future. Tom Lee's prediction of ETH holding support at $4,300 seems validated, as the price has largely stayed above this level since August's major dip. The key price levels to watch on this time frame are the August high of $4,958.70 and the previously mentioned $4,811 resistance. A decisive move above these levels would signal a strong continuation of the long-term bullish trend towards the $5,000 to $5,200 targets and beyond. Conversely, maintaining support above the $4,200 to $4,300 zone, where significant whale accumulation occurred, is crucial for sustained upward movement. Shifting our focus to the one-hour chart, from late August to early September 2025, we observe the immediate aftermath of that significant pullback. The volatility in this period showcases the battle between bulls and bears as the market digested the previous highs and subsequent corrections. While this data ends on September 2nd, it provides insight into the consolidation and initial attempts at recovery following the sharp drop from the August highs. The range-bound action in this hourly view, particularly between $4,300 and $4,450, demonstrates the market searching for equilibrium before the renewed bullish drive in mid-September. Now, let's zoom into the 15-minute chart to analyze the immediate short-term dynamics, capturing price action right up to today, September 20th, 2025. The current price is trading around $4,470, well within the $4,450 to $4,650 key trading range identified in the news. We can see a period of consolidation and smaller price swings over the last 2 days, indicating indecision but also potential for a breakout. The market is testing minor resistance levels around $4,520 to $4,530 and finding support near $4,450. Traders should watch for increased volume accompanying any decisive move outside of this tight channel. A Bollinger Band squeeze might be forming, hinting at a sudden big move, as suggested by some analysts. For short-term traders, sustained breaks above $4,530 could offer long opportunities, targeting the higher end of the $4,450 to $4,650 range, possibly even towards $4,700. Conversely, a breakdown below $4,450 could see ETH retesting the broader $4,300 support. Monitoring transaction volume on these smaller timeframes is key to validating price movements and avoiding false breakouts or breakdowns. To recap our in-depth analysis for ETHUSD, several key price levels stand out. On the upside, immediate resistance lies around the $4,650 to $4,700 zone, with a stronger hurdle at $4,811, which acted as a pullback point previously. The ultimate target from a major breakout above the August 2025 high of $4,958.70 could pave the way for levels as high as $5,800, and even the ambitious $8,557 projected by some analysts. On the downside, critical support can be found in the $4,450 area, followed by stronger accumulation support between $4,200 and $4,300. Unbiased predictions suggest a bullish continuation is moderately likely in the short to medium term, approximately 60 to 70% likelihood. This likelihood is reinforced by sustained institutional interest, ongoing positive macroeconomic trends with Fed rate cuts, and the anticipation of the Fusaka hard fork. However, a significant rally towards the higher targets depends heavily on continued ETF inflows and broader market liquidity. A potential retest of lower support, possibly around $4,000, is less likely in the immediate future, perhaps 30 to 40% likelihood, but could occur if bullish momentum wanes or unforeseen negative catalysts emerge. For traders, look for high-volume breakouts above $4,700, which would strongly reinforce the bullish case. Conversely, a break below $4,450 on significant volume would signal a need for caution and potential deeper consolidation. Always keep an eye on on-chain data for whale movements and any regulatory news concerning Ethereum ETFs. Thank you for watching Explain the Charts, and remember to trade wisely.